I believe I'm in Jeremy's account. So here again, for the sake of time, I'm going to go as quick as I can through this because I only have like 15 minutes of video that I can upload to YouTube. So here we go. So basically, I'm doing a scan for stocks that from starting this morning have been trading down, kind of a pullback, but they've been in an upward trend. So they've been up for the last several weeks, and they've had a recent pullback. So we're going to look at those, and I've got those stocks that are trading between $8 and $60, trading at least a half a million, and are down currently between 2% and 100%. So I've already done that scan. I've already saved it. So now if I go over to the watch list, and I'm going to go over here to this watch list for today. I'm looking for 11.7 down. There it is. Oh, not 11.7 down. 11.9. I'm sorry. 11.9 down. There it is. Right here. Detach gadget. Okay. So these are all the stocks that have been that are in this list that are down between 2% plus, and they're trading between $8 and $60. So we're going to take a look at them. And let's set up our chart, and we'll detach the chart, not minimize, but place it over here. We're going to go to our trade tab. We've talked about before. We're going to detach that and get that set to start loading these symbols. So we can put that over here. And now we'll just minimize the main screen, come out of that. Bring this down here and bring this up here. And spread this out a little bit. Okay. Give ourselves a little more real estate here and a little more real estate here. So we're going to be, stretch this out a little bit. We're going to be looking at 30-day trades. Basically, it's going to be more than 30 days because we'll be looking at December. November trades, I didn't do anything. Actually, I didn't go back to October. I didn't do anything in October because just needed to have a lot of caution from September. September, the market dived tremendously. Took a nice little hit on that. It happens. A couple of single trades we took big hits on. Plus, the market started caving because COVID started just going crazy all over the country. And then in November, the market was just too volatile because of the elections. There was too much skepticism, not knowing which way the election is going to go. The Wall Street can handle knowing if it's going to be, president or Democrat, but just so many things that are just not in balance. Not knowing, there's a phrase on Wall Street that Wall Street does not like uncertainty. So because of all this uncertainty, there was just too much risk and too much risk for downside. So I pretty much stayed out of the markets in your accounts for that reason. And I'm still a little cautious. Fortunately, we had a good result from Tuesday's election, which manifested itself on this past Tuesday morning, where Biden was announced the winner. So now most of the market is turning up. Renewed enthusiasm has come back into all the markets worldwide, and at least we know what we're dealing with. We know who the next president is going to be in the United States, and the whole world has been watching. So I'm still going to approach this a little caution. Of course, Trump's got a lot of lawsuits out there, and a lot can happen next 6 weeks. So having said that, I'm going to take a more cautious approach, and instead of selling out of the money calls, leaving ourselves, not much room for downside protection, I'm going to take a more neutral to slightly bearish approach that's going to give us some hedging protection. And so I'm going to look at selling not just covered stock. Well, basically, yeah, covered stock, which we've done before, but I'm going to sell in the money covered stock. I'm not going to take the time to explain that here because that's a teaching session. I need to use this time to see what the possibilities are. So I need to put everything in one so that everything will match up. So let's get started. First one is AG. There's no order. Basically, it's alphabetical. So I have no particular order. It's just going randomly based on what I'm seeing here. So AIG or AG, I'm sorry. Let me take a look. It's trading $11, and I'd be looking at little protection, downside protection, $8. Okay, so this trending relatively up. Okay, a little choppy, but relatively up. I think I'd feel comfortable. Not so much here. That's been a little too recent, but I think I feel much more comfortable here. Okay, so this level is the $8 level. So I'm going to look and see what can we get at $8. So for $8 call, we need to buy it for less than $8. In other words, if we're buying this position, we'd be buying the $8 stock. Okay, should say we'd be buying the stock for $8. So in essence, we'd be buying it for 11, but we'd be getting money for it. So we'd be essentially buying it for 8. So if we buy it for 8, we're trying to see what would we get for it if we bought it. Looks like we'd only be to get maybe 10 cents for it, so that's not enough. So for example, the mark right now is the mark, which is the halfway point between the bid and the ask. Okay, so we don't have to quite buy it for 801. Can't quite sell it for 789. So the difference between the two is 794. So if we were to buy it for 794, which means we would be taking in basically a $5 premium. So it would cost us $234 to get back $6. That's not worth it. Even if we could get, let's see, we could sell it for $790. Let's look at $790. Let's look at $785. If we could buy this for $785, let's see, what would that do for us? That would bring us $15 over against $220. That's not enough. That's not even 10%, right? Jeremy, 10% of 225 is what? 2250, right? This is 15. That's not enough profit. And I'm noticing that I'm looking at the 11-day. Let's go to the. We don't actually want to be in the 11-day. We know there's not going to be enough premium left in that. So, excuse the cough again. I don't know how to mute this. So let's look at the $8. That's looking a little better for 30 days from now, or basically the monthly calls, which expire December the 18th, 39 days from now. So the $8 call looks like I might be able to buy it for somewhere between $785 and $796. So let's look at that. Let's look at $785. Here again, that's not enough. We would need to have, we'd want to have maybe about $30. That's at least, that'd be about 15%. So at $30, we would need, that's about 70. 70 to 80 is 770 to 80 is 30 cents. So we needed 30 cents to give us $30. So there would be, if we could buy this for 770, it would give us 210, I'm sorry, it would give us a $30 return on $210. That would give us a 15% return. That's sweet. You know, I'd be very happy with that. So I'm going to go for 5 of those. All right. 5 of those, 770. Let's give it room. just popped up here. Just going to give it a little room to come down a little bit. So I'm going to say, let's try to get 765 for it. I'm going to put in good to cancel. So yeah, I'd be happy with that. So that would give us at $1,000, I guess about almost 17%. I'd be very happy with that. Put good to cancel, but I'm not going to give us a whole lot of time. I'm going to put in here cancel on this coming Friday. Okay, today's the 9th. So I'm going to put an order for it to cancel automatically this coming Friday. Say at 1600, which when the market closes, 4 o'clock. If this thing doesn't hit by then, we're automatically out of it. Hit confirm and send. Okay. So in Jeremy's account, buying power $1,000, and we're looking to bring in 175. Let's send this. Okay. Next one. And that's this one here. Yeah, that's a little. That looks like something was way up here, came down tremendously. Looks like it was earnings and shot through the roof. Like there's a lot of volatility, a lot of room for it to just kind of start coming back down again. So I'm gonna shy away from that. I like to see something that's just a little more smooth, not, you know, more like this, not this, whoom, whoom, because this could look like this. So we're just going to just move on out of that. Let's take a look at the next one. And same kind of thing. Something shot up, shot down. Don't like that. I'll look for something much smoother. That's a little smoother. Okay. We can see over a good period, it's been going over. It's had some choppiness. But in its choppiness, okay, it's pretty much has stayed relatively above this 50-day moving average line. So over the course of 50 days, every day, like for example right here, this has been above where it's been for the last 50 days. This right here is above the average of where it's been for the last 50 days. That's what this means. This right here, there's my timer going off, so it means I got a couple minutes left. This right here, it's been above. This is trading above where it's been over the last 50 days. It dipped down a little bit below where it was trading over the last few days, and then it came back up. So I like this. So for the purpose of getting past the timer limit, I'm going to take a look at this one last one, and then I'll do another video to get the rest in. So I would be comfortable, not 38, no, let's give us more room. Say 30, I'd be comfortable at 30. All right, let's see what we can get if we try to go for $30. 29.53 by 30.30. Let's see if we can get 29.50. That gives us $50. So 29.50. Let's see what that will look like. 29.50. That would give us $50 on 1,000. That's not enough money. So that's no good. We're going to something else. And I'm going to cut it off here, and we'll come back to another one. So anyway, that's it for now. I'll do a second one, part 2, in just a moment.